UK inflation has been surprisingly stubborn. Whilst inflation in Europe has fallen to 6%, UK inflation remains stuck in double digits. Now, whilst real wages fall, some companies are reporting record profits, with concerns that firms are taking advantage of inflation to increase their profit margins, to slip in price increases much greater than their cost rises. Some argue that up to 50% of the current inflation is coming from rising profit margins and not just rising costs. The high inflation is really bad news for the economy because it means a continued squeeze in living standards and higher interest rates. So why is inflation so high, and when will it fall? Well, historically, inflation is often caused by strong economic growth, with high demand pushing up prices. But this is not occurring in the UK. UK growth is still below the trend rate of growth, only 0.1% last quarter. Now, a common refrain of ministers is that inflation is at risk from wage inflation, and this is why there is a reluctance to raise the wages of public sector workers. However, wage growth is not the cause of inflation. We are still looking at an unprecedented fall in real wages. The IMF agree. Their chief economist, Pierre-Olivier Gouanchas, agrees, pointing out that instead profit margins are surging as firms benefit from prices rising faster than costs. Now, a significant cause of current inflation is rising energy prices. Surging gas and oil prices in the past 12 months have led to higher energy bills, and this is the biggest cause of inflation, running at nearly 25%. However, wholesale prices of gas and oil have fallen since last summer. Yet, at the same time as falling oil and gas prices, this has still remained a very profitable period for the big energy companies. For example, BP just very recently announced underlying profits have reached $5 billion in the first 3 months of 2023, and shows they're unaffected by the falling oil prices. The next biggest cause of inflation is food inflation, which is running at around 20%. Now, this is partly related to rising energy prices, high cost of heating greenhouses, high cost of fertilizers. But at this point, it is important to note that rising prices are not just due to higher costs. Firms are taking advantage of inflation to increase their profit margins. It's like if costs are rising 15% and firms increase prices 25%. Who is going to be able to distinguish? Paul Donovan, chief economist at UBS Wealth Management, believes that much of the current inflation is due to this profit push or greed inflation. He said, "I believe that much of the current inflation is driven by profit expansion. Typically, you might expect around 15% of inflation to come from this profit expansion, but the number today is probably around 50%. Last month, Fabio Panetta of the European Central Bank said that there could be an increase in inflation due to increasing profits. And although the Bank of England are often keen to warn about wage inflation despite little evidence, Catherine Mann, one of the 9 members of the Monetary Policy Committee, said she was concerned about the ability of firms to take advantage of consumers' willingness to tolerate higher prices. And this profit push inflation reflects increased monopoly power, especially in sectors such as groceries and energy distribution. A report by Unite highlighted many examples of profit push inflation in recent years. For example, Tesco, Sainsbury's and Asda, the top 3 supermarkets, doubled their combined profits to $3.2 billion in 2021 compared to 2019. Higher energy prices have been a major factor in rising inflation. This stems from the rising gas prices in 2022. But the nature of the UK electricity market means that all the electric producers saw a rise in prices, even though gas accounts for just 40% of the industry. It means that other electric producers were making higher profit margins than usual, with Treasury officials claiming UK generators have already made more than £10 billion in excess profits. It's also a global phenomenon. A big cause of rising prices in 2022 is supply chain shortages. But this crisis caused the 8 top shipping companies, such as Maersk and COSCO, to make a combined £62 billion in 2021, boosting their profits by over 20,000% on 2019. And they were able to pay out over £4.7 billion in dividends last year. US corporate profitability has soared both in nominal terms and also as a share of GDP, a reflection that the current cost of living is not affecting people equally. And this period of high inflation has been an opportunity to increase profit margins and underlying profitability. Now, a good question to ask is, why is UK inflation higher than Eurozone inflation? Well, there are some what you might call technical reasons. For example, the price cap guarantee in the UK means that falling gas wholesale prices do not directly get converted into lower inflation straight away. Spain, which has no price guarantee, already has inflation of around 3%. Next month in May, we should see the last big gas price rise fall out of the inflation index, reducing the rate by 1%. So hopefully we can expect inflation to fall. However, despite these technical factors, UK has had higher inflation than Europe for a couple of years, and a few factors spring to mind. Firstly, the relatively weak pound sterling pushed up import prices, making the rise in energy prices even worse for the UK. Secondly, the many impacts of Brexit have contributed to higher UK inflation for a variety of reasons. A shortage of workers, especially in agriculture, has led to some food shortages and higher prices. Brexit has made cross-channel trade more difficult and expensive. And when European supplies were hit early in the year, the additional logistical challenges of getting food into the UK meant it was the UK which was facing the greatest shortages, again pushing up prices. So what's going to happen to inflation? Well, earlier this year, I predicted inflation would fall this year. I was in good company. Other economists and the Prime Minister, Rishi Sunak, were all confident inflation would halve this year. And despite being proved wrong for the first few months, there's still a strong logic to this, because falling gas prices, a weak economy and falling real wages will mean that when the energy price rises fall out of the index, inflation will be lower. But it's important to bear in mind, if prices will still be rising, inflation will still be quite high. It's likely to be above the government's target for a considerable time. And the concern is that inflation has been more stubborn and persistent than we forecast. There's been a concerning rise in core inflation, and some signs the UK is more vulnerable to inflation than elsewhere. All that being said, I still expect inflation to fall this year. But its stubbornness is definitely a concern for both workers and the economy. Why is lower inflation forecast? Well, the headline rate will move closer to the core inflation rate as energy prices drop out of the index. Global food prices have fallen by around 25% in recent months, and we should start to see lower food prices over time. Now, the impact of higher interest rates on inflation is relatively weak, but it will still have a negative effect. What I mean by that is that higher interest rates will have very limited effect on reducing inflation, because the inflation is mainly cost push. But if people are squeezed, then that will be another effect of reducing demand and reducing prices to some extent. Thirdly, and perhaps most importantly, despite some growth in nominal wages, they have been well below the headline rate of inflation, suggesting inflation expectations are still low. And it's not possible to have continued double-digit inflation with such low wage growth and falling energy prices. Yet nevertheless, the stubbornness of inflation definitely isn't welcome. It just means we face a worse trade-off: higher costs of living, lower real wages, and the prospect of higher interest rates. Final point, what about the quantitative easing and the increasing money supply during COVID? Is this a cause of inflation? Well, there's a few points to make. Firstly, the large increase in money supply we saw between 2009 and 2021 had no impact on inflation. It did not filter through into higher consumer demand, but often just increased bank balances and balance sheets, and found its way into the stock market and housing market. And the increase in money supply during COVID is not the primary cause of inflation, because the same dynamic played out. It's not quantitative easing that's a major cause of inflation in the UK. Outside of the US, demand has been pretty weak. Inflation is primarily cost push and profit push driven. So the increase in profit margins is definitely a concern. Now, it's possible, as the economists say, that later in the year, consumers will become less tolerant of higher prices, and this will put more competitive pressure on firms to reduce prices. But the past 2 years have been very good for some big companies because they've been able to use inflation as a way to increase prices even more. And in markets where there's lack of competition but monopoly power, this is really reduced consumer welfare. If you like this video, you'll enjoy this one on all the problems facing the UK economy. Do check it out. It's really good and detailed. Cheers. Bye.